Most people look at trading cards and only see collectibles. They see shiny pieces of cardboard, maybe worth a few dollars, maybe worth a few hundred, but still just souvenirs of a hobby. I see something different. I see assets. Long-term stores of value, pieces of cultural history that have the potential to grow over time if chosen carefully. That's why I treat my PSA Vault like a retirement portfolio. When I say that, I don't mean it as a gimmick or just a catchy phrase. I mean, I literally think of my vault in the same way most people think of their 401k, their IRA, or their stock account. It's a place where I put things I don't plan to sell tomorrow. It's where I carefully choose what goes in, and once it's there, I let time, demand, and scarcity work for me. It's my retirement account, only instead of stocks and bonds, it's slabs of cardboard with Charizard, Pikachu, and Blastoise on them. Think about it. In retirement investing, you trust a custodian like Fidelity or Vanguard. They hold your assets, protect them, and provide the system that makes investing possible. PSA does the same thing with cards. They authenticate, grade, and lock them in the vault. Once it's there, you don't have to worry about safety or storage. It's insured, tracked, and ready for whenever you want to sell. The vault is infrastructure, and infrastructure is what transforms a hobby into an asset class. Without it, this is just a stack of cardboard. With it, you have a secure portfolio. Before we dive too much deeper into this, I do want to say I am not a financial advisor. The information I provide is for educational purposes only and should not be considered financial advice. I am not responsible for any actions you take based on this information. Now, just like a portfolio, diversification is the first rule. In finance, you never put all your money in one stock. In collectibles, you never put all your hope in one card, even if that card is Charizard. Yes, Charizard is iconic. It's the Apple or Amazon of Pokémon. But if you only buy Charizard, you're overexposed. That's why I mix my vault. I hold Pikachu promos because Pikachu is the face of the franchise and has worldwide demand. I hold Japanese exclusives because they carry scarcity and cultural weight. I add a few modern chase cards for growth potential, but I balance them with vintage slabs that have already proven themselves over decades. That balance is what makes a vault more than a collection. It's what makes it a portfolio. Now, let's talk about risk and reward. Every portfolio has safe plays and growth plays. In the world of cards, the safe plays are your trophy pieces, your first edition base set holos, your low population promos. These are the blue chips, the stable anchors. The growth plays are your alt arts that skyrocket in value after release, the hyped cards everyone scrambles for. Both matter. If you only play it safe, your vault grows slowly. If you only chase hype, you could lose half your value when the market cools. A smart vault balances the two, just like a smart retirement account. Some cards you lock away for decades. Others you hold for a year or two, then trade up into stronger long-term assets. That's allocation. That's strategy. Another principle is liquidity. In finance, liquidity is how quickly you can sell without losing value. Stocks are liquid, real estate isn't. In collectibles, raw cards sitting in a binder are not liquid. You have to prove they're real, find a buyer, ship them, and deal with disputes. Slabbed cards in the vault are liquid. They're graded, authenticated, and listed on a trusted marketplace. If you want to sell, it's as simple as clicking a button. That's the kind of efficiency and transparency that makes these slabs behave like true assets. Now let's look at compounding, because this is one of the most powerful concepts in both investing and card collecting. In finance, compounding is when your money makes money, and then that money makes more money. Over time, the snowball gets bigger. In cards, compounding works differently, but the principle is the same. You might start with a $50 slab. You sell it for a profit and roll those gains into a $500 card. Later, you sell that and upgrade into a $5,000 Grail. Each step builds on the last. Over time, the quality of your vault grows. You're not just increasing value, you're upgrading strength. That's compounding in a collectible world.
Population reports are another key factor. In stocks, people study fundamentals like earnings and cash flow. In cards, fundamentals are supply and demand. How many exist? How many have been graded? How many are 10s? If you're holding a card with only 200 PSA 10s, and it features an iconic Pokémon, that's scarcity on your side. If you're holding a card with 20,000 10s, the supply could drown out the long-term value. That's why serious investors check population reports the same way stock traders read financials. It tells you whether your slab is truly rare, or just looks rare in the moment. Psychology plays a big role too. With a retirement account, you don't panic every time the market dips. You don't cash out at the first sign of red. You hold because your horizon is decades. The vault works the same way. By locking slabs away, you remove the temptation to sell impulsively. You stop checking every day, and you start thinking in decades, not weeks. That discipline is the difference between hobby behavior and portfolio behavior. When everyone else panics, you stay calm, because you're playing the long game. Exit strategy matters as well. Every portfolio has a point where you cash out and use the gains. With the vault, you can do that cleanly. You can sell directly from storage, reaching buyers around the world without ever handling the card yourself. It's like liquidating investments. Fast, efficient, professional. No messy shipping, no disputes, no risk of damage. That's how you turn collectibles into true financial assets. Generational demand is another driver.
In finance, demographics shape markets. In Pokémon, nostalgia works the same way. Millennials drove the explosion in vintage prices when they hit peak earning years. Gen Z will push up the sets they grew up with. Gen Alpha will do the same decades from now. Every new generation keeps demand alive. That's why I believe in treating a vault as a retirement account. It's not just a bet on today's market. It's a bet on the future, on the next generation that will want the very slabs you're holding now. And then there's scarcity. In every market, scarcity creates value. Some promos had tiny print runs. Some cards are notoriously hard to grade in a 10. Others were only available in specific regions. When you lock those into your vault, you're holding assets most people will never touch. That's long-term value. That's the equivalent of owning a rare commodity. The key is to identify those cards early and secure them before the rest of the market realizes how limited they are. Another principle to borrow from traditional investing is rebalancing. In a retirement account, you don't just set it and forget it forever. You check in, and if one part of your portfolio grows too large, you trim it and reallocate. The same applies to a vault. Maybe you loaded up too heavily on modern alt arts because they were hot at the time. Maybe your Charizard allocation is way bigger than your Pikachu or Legendary slots. Rebalancing means adjusting, trimming some categories and reinforcing others. That keeps your vault healthy and balanced. It's not about chasing trends. It's about maintaining structure over the long run. Risk management is another key. In finance, you're told to know your tolerance for risk. Some people can handle market swings, others can't. The same is true here. Some collectors panic when prices dip, others see it as a chance to buy. If you know you're the type to panic, you should lean heavier into proven blue chips like first edition holos or timeless promos. If you're comfortable with swings, you can allow a slice of your vault to be more speculative. There's no one right answer. The best vault is the one you can hold through the ups and downs without losing sleep. Information is power in both finance and collectibles. Investors pay for research and analysis. Collectors can use population reports, historical sales, and cultural trends. Knowing which promos had tiny print runs, which Pokémon resonate across generations, and which cards are truly hard to grade gives you an edge. Treating your vault like a retirement portfolio means you don't just buy what looks cool. You study, you analyze, and you make educated choices. That knowledge compounds, just like your assets do. The other advantage of this mindset is that it filters out noise. Every new set has hype. Every month, someone online is screaming about the next big card. But when you think in decades, you ask a different question. Will this matter in 10 or 20 years? Most of the time, the answer is no. That filter saves you from wasting money on passing fads. Noise fades, fundamentals endure.
And then there's legacy. A binder full of raw cards might be fun, but a curated vault of slabs is something more. It's wealth. It's security. It's something you can pass down. Imagine showing your kids or grandkids not just a pile of collectibles, but a professional, verifiable portfolio of assets that have grown over decades. That's a legacy worth building. That's what makes this strategy more than just collecting. It's wealth creation through culture, discipline, and patience. At the end of the day, all of this comes back to mindset. You can treat cards as toys, or you can treat them as tools for building a future. You can flip for quick wins, or you can hold for compounding growth. The difference is discipline. When I say I treat my PSA Vault like a retirement portfolio, it's not a metaphor. It's how I actually approach this hobby. I diversify, I allocate, I rebalance, I hold long-term, and I build steadily. And over time, I know that work will pay off, not just in dollars, but in legacy. So if you're serious about collecting, start thinking bigger. Don't just chase hype. Don't just buy randomly. Build a vault with the same discipline you'd build a retirement account. Choose cards that matter. Balance risk and reward. Think in decades, not days. Do that, and one day, you'll look back and realize that what started as cardboard has turned into something far more powerful. A portfolio. A retirement plan. A legacy.